we're going to be talking about Robinhood. Checking and savings? Yeah, that's exactly what I said too. Welcome to the Money Growth Academy. My name is D. This is where we demystify the stock market, simplify investing, and multiply your opportunities for financial success. So let's just take a look at it. If you don't know who Robinhood is, it's a $5.2 billion stock market tech startup. They raised nearly $539 million so far, and totally disrupted the brokerage firm industry. Just shattered it. Today they've been around about 5 years, and they have over 6 million accounts. Astounding what they've done there. And so what was the big announcement this week? Well, the big announcement came Wednesday to launch on Thursday. So let me just catch you up. So they announced some great news for the everyday person. And so that great news is 3% let me put this again, 3% zero fee checking and savings with no requirements for minimum balance. Now, let me say that again, 3% zero fee checking, and that's with no balance required. So if in fact they're able to do that, that surpasses the best U.S. banks that have offering the best rates, right about 2%, but most aren't even at 2%. So, the other thing is, they're going to also give you with that account access to 75,000 ATMs. 75,000 ATMs, no fee. So totally disruptive in the financial industry, really in an industry that's designed just to kill your savings, right? But they're just going to hit you with fee after fee after fee after fee. And that's just for them to store your money for you. So how does Robinhood accomplish this? How do they do this? So one of those things is it really took a play out of the Amazon playbook is really what they did, right? So they took a page out of that playbook and they ran with that play. And what is that? Well, the willingness to give up some profitability in the near future for the opportunity for the potential gains in the future, right? So they're going to give up some of that profit in the beginning so that they grow their base, grow their customer base, and so forth. So they're willing to give up some of these things. Also, they're going to use they're going to lower their cost structure through automation. So they're going to do some engineering in that way, utilize technology in a way to help automate some of the things that they need to do. The other thing is they're going to buy securities within their own account, and then they're going to share back some of those profits back with its customers. So that's kind of how they plan to accomplish this. And so this particular graph here is showing bank checking and savings account comparisons. And as you can see, Robinhood at the top at 3% that they're going to give back in the way of returns. And then Fidelity Cash Management, 0.31. I mean, these are huge places. Bank of America checking and savings, 0.01. And then Chase checking and savings, 0.01. I think it's 0.01, and I think they'll go up to as much as 0.06. And then Wells Fargo checking and savings, 0.01. And so you can see, I mean, that's 30 times what these guys produce in terms of rate of return on checking and savings. But wait a minute, hold on. Hit the brakes. That was yesterday. So hit the brakes today and brace for the airbags, because everything changed today on Friday. Well, what changed? Well, let's talk about it a little bit. The SIPC, here's just a few of their comments as they heard about the launch yesterday on the website. They said this is the first they heard of this plan, and they have now forwarded their concerns to the SEC. Wow. The SIPC said that Robinhood is not protected by the FDIC, since they are not technically a bank, but a brokerage firm. And then they said, based on the way they have the SIPC, excuse me, has come to understand, is that Robinhood's intention to buy securities for its own account and then share those proceeds back to the the customers is really like borrowing from the customers, and the SIPC says we don't insure loans. So a little bit of a quandary right there. So we'll see how that shells out. So who is the SIPC? It's Securities Investors Protection Corporation. So Security Investors Protection Corporation. So they protect investors against loss of cash and securities such as stocks and bonds. So what does the SIPC, what don't they do? Well, first of all, to make this clear, they do not protect the value of securities. That's stocks and bonds. That's not what they do. And it does not protect the investor from market risk. You put your money in the market goes down. That's not the SIPC. There's no insurance that way, okay? So what they're looking for is issues around solvency. That means the brokerage firm or the bank's ability in the event that the bank is solvent or some other technical issues are going on with it financially, that those clients with those brokerage firms are insured up to a certain amount. So in most cases, well, at least in Robinhood's case, it is, not in Robinhood's case, but in most cases, it's upwards to 500 is what the SIPC provides. And then for those lost securities, up to about $250,000 in cash. So again, SIPC makes sure each investor is covered up to $500,000 in stocks and bonds, and then up to about $250,000 in cash. So this is very similar to what you see in a mutual fund or what you might see in a money market fund. So here's another question the SIPC had, and that is, what happens when the market takes a turn for the worse, right? So how's that 3%, especially when when Robinhood is reinvesting, right? When they're investing in their funds in the market and then sharing those proceeds. Well, what happens when the market's down? How does that play out? And so those are some of the questions that they had, and the SEC said they would not help in that case. So in a nutshell, so that's really what they're talking about. So in final summary, in a nutshell, the SIPC said that Robinhood checking and savings accounts would not be protected. So they wanted to make that clear at this point. So that should give you some pause. It certainly gives me some pause. As I think about what it is I want to do, because boy, I tell you what, it sounded great in the beginning. So I'm going to wait for the dust to clear before I place too much money and or at least too many of my financial eggs, I should say, in the Robinhood nest. And I'm just going to wait it out, see how this thing shakes out. Be honest with you, I hope Robinhood figures it out. I hope they can make it happen because, that's good news for everyone if they can do that, right? So anytime you can reduce those fees, that means more money for you and I. So I'm hoping that they pull it off. So again, thanks for watching the Money Growth Academy. Again, this is where we seek to demystify the stock market, simplify investing, and then absolutely multiply your opportunities and your options for financial success. So go ahead and subscribe and come back and watch some of our other videos. Have a good day. See you next time.